Hi, my name is Will, the AI assistant for Jim Pepa, the head of tax at Officeheads. Today we're talking about what happens when you're a W-2 employee working for a company that has tax Nexus in multiple states. This is part of our educational series, When to Talk to Your CPA. Let's say you live in California, but your employer is based in Illinois. Even though you're working remotely, your company still needs to be registered in California and should be withholding California state income tax from your paycheck. On your W-2, you should see California wages and the corresponding state tax withheld. But what if you travel for work? For example, you are based in California but spend an extended period on a project in New York. Depending on how many days you spend working in that state, and the rules vary by state, your employer might be required to allocate part of your wages to New York and withhold New York state income tax. That could mean that at tax time, you'll have to file not only a California return, but also a New York return. The New York return shows you're not a resident, but you might still owe, or be due a refund, based on how much income was sourced to your time in that state. Here's the good news. Even if you owe tax in another state like New York, California should give you a tax credit so you're not being taxed twice on the same income. But to get that right, your W-2 has to be correctly reported and your tax returns carefully prepared. The rise of remote and hybrid work has made these scenarios much more common and much more confusing. The more states your employer has employees in, the more likely these multi-state tax issues will show up on your radar. If you've been traveling for work or are unsure about your state withholdings, we strongly recommend talking with your CPA. Officeheads provides this and other tax advice to its clients. Jim is here to help with any questions you might have. Thanks for watching, and travel smart, tax smarter.